Hi, my name is Mike Cameron. I'm a broker owner of a real estate company down in Del Mar, Rancho Santa Fe. Really excited today to have one of the top lenders in San Diego, Jonathan Jerotz, with us. He's going to talk to us today about some of the things to watch out for in the lending process. JJ, thanks for coming in today.
Hey, thanks for having me. Good to be here. So Mike, I want to talk about some of the big mistakes that I see people making when taking a home loan.
Yeah, great.
And one of the biggest things is people go shopping for interest rate without having their credit run first. And when you look at the dynamics that go behind the interest rates, credit score is one of those big factors that factor into it. So sometimes it creates disappointment when after they've kind of set on an interest rate, which in their mind they might be running numbers at home to figure out that payment, and then reality sets in and they find out that their credit score is 100 points lower than they thought it was, and it changes all the dynamics of their payment structure and then going shopping for that.
Well, it's really important to know your credit score. I heard that don't the credit agencies have like 3 different credit scores or for each one of us?
Yeah, exactly. Yeah. So you have multiple credit scores. Sometimes people have a free service. It's a consumer credit score, and it may not be accurate when a mortgage company actually pulls their credit.
Yeah.
One of the big mistakes that I see people doing is doing a verbal loan application with their mortgage banker or their bank and not supplying all the documentation. And Mike, sometimes that creates a problem because once you finally supply the documentation to go through the real home loan process, maybe there's some income parts of that documentation that come up, and you take somebody that was pre-approved with a verbal loan application and they're not approved anymore.
Yeah, that makes total sense. You know, the question I get a lot from buyers is, what type of documentation am I going to need today?
Yeah.
Is it really in depth? I mean, you have to do tax returns, W-2s, bank statements, right?
And yeah, pay stubs, W-2s, tax returns. If you own multiple companies, that's where it gets a little complex. But I will tell you that we just launched something called a 10-day close. And so we can do, if you're a W-2 employee, we can do digital verification of employment income and digital verification of assets. So we can eliminate a lot of paperwork hassles from the consumer if they kind of fit that right borrowing structure. Which
is it getting easier, or is it getting harder? I mean, is the requirements is it getting any easier? When is it going to get easier?
I think it is easier with the digital verification. If you own a bunch of companies, you're going to have a paperwork load.
Well, that's great.
Which is understandable.
10-day close is awesome. It's really great to hear. What's one of the mistakes?
Yeah, so the big mistake is finding out what's your true maximum payment that you're comfortable making on a monthly basis. People can tell you that you're qualified for something, which is great. So, Mike, you're working with someone and you're like, hey, JJ, I want to know how much they can buy. They're qualified up to $1 million with their 20% down payment, but are they comfortable making that payment? And so sometimes people get lost in the luster of looking at homes and forgetting about the most important part, the amount they're going to have to pay every month. Because it's one thing to qualify for that payment, but it's another thing to be comfortable making that payment. And I see that mistake happen all the time. So when they finally find that house that they're in love with and they look at the payment, they have to backtrack and redo their search.
So it's interesting to me because when I have buyers come into our office, it's one of the exercises we take them through and try and help them really understand what the payment's going to look like. But are they missing some component of the payment, or where are they making the miscalculations?
Well, there's a lot of online calculators out there, and they're not calculating the correct property taxes or homeowners insurance or maybe mortgage insurance if that's required in their scenario. So it gets lost in that.
That's a good point. I saw on the Zillow calculator, when you pull up the default tax rate, it's like 0.63%. It's not even.
And we're like double here.
Yeah, so that's a great point. Anything else?
Yeah, I think one of the big things is, and this is another one, you think it's crazy how it's missed, but going over closing costs. People get hung up in how much they have for a down payment, but they forget about the closing costs aspect. And let's just say from an estimated standpoint, maybe you're talking 2% of the purchase price, and that might be high if you're buying $1 million home. But if you're buying a $500,000 home, 2% is probably going to be pretty accurate. So people say, well, I have 20% down. And then you start working all the money, and you're like, okay, well, where are the closing costs going to come from? And people aren't having that necessary conversation up front. It's something that has to happen up front. So you understand how much money total is going to go into the transaction, not just the down payment.
Well, I know it's another topic we hit on, important, in the buyer consult that we have too. So
Yeah.
I know that's is a 1.5% to 2%. Is that a good
I think
number
that's a
to
great.
shoot
I
for?
think it's a
Yeah.
great average. Yeah,
Okay.
a good estimate.
Okay,
And then I think the last thing that I really see is talking about your long-term financial goals. With your past as a financial advisor, you'll understand this. I mean, people are taking on their biggest liability on a for their life, right? Taking on a $500,000, $1 million loan, and talking about how long are they really going to hold this loan for? Because it could make a difference on how you structure the financing. Maybe you do an adjustable rate mortgage
I was
if
going
it
to say
makes
that
sense.
that makes
Yeah.
sense.
So
Are
if
more
you're-
people doing adjustables today for that reason?
Well, as interest rates are going to climb,
Yeah.
and we're seeing those climb right now. As interest rates climb, the adjustable rate mortgage will come back to play. And I'll say this: an interest-only adjustable rate mortgage with the right family with the right financial situation can make a lot of sense for their long-term
Oh,
financial
they're coming
health.
back, huh? They are coming.
Again, for the right
Yeah.
person.
No, it makes
Yeah.
sense. You know, I think that's a great tip for people to hear from
Yeah.
you, and really appreciate you talking about these things
Thank you.
because we want our buyers to be most prepared, and you're a rock star with the loans. Thank you very much for coming in today. You can catch JJ at his website, Ask JJ Now, www.askjjnow. He's in Del Mar and one of the best. Thanks a lot, JJ.
Thank you.
Yeah.